Let me know where you are watching from. Where are you watching from? You can just drop that in the chat section. Where are you watching from? Okay, let me know where you're watching from in the chat section. All right. So today we'll be taking a deep dive, carrying out technical analysis using price action. And this session is basically, not an investment advice. Any opinion, news, research, price analysis, or any other information discussed on this webinar or linked to this presentation is provided as a general market commentary and do not constitute investment advice. My name remains Tunmise Olaoluwa, and a quick intro about me. I have 7 years experience trading with a solid background in finance and quantitative research. My trading is focused on price action, momentum, trend, and candlestick pattern. And I trade 3 major currencies: EURUSD, GBP USD, and USD JPY. In today's session, we will be looking at review EURUSD currency pair. I'm going to review the price movement of EURUSD, and we will also get to review currencies suggested by our audience and attend to Q&As either during the session or after this session. Now this session is going to be 45 minutes, and you can please use the YouTube live chat to ask any of your questions during the course of the webinar, and I will periodically check to answer all your questions. Now, when we come to strategy, our strategy consists of analyzing historical price movements. We utilize candlestick formation, chart patterns, and market structure. Now, what kind of trader is this strategy suitable for? This strategy is suitable for position traders, intraday traders, and swing traders. Now, when do we use this strategy? We use this strategy during high liquidity periods and time frame between 1 hour time frame to the monthly time frame. Now, let's take a deep dive into the trading session. So today we're going to start with EURUSD. And since we are doing a top to bottom approach, we'll start from the monthly time frame. All right, I can see Barry from South Africa, you're welcome. I can see Edward from Nairobi, you're welcome. I can see Valentine, from Gautalama. Okay, I can see Lynette from Cape Town. Okay, so let's do this. All right. Now, in our top to bottom approach, some of the key things we pay attention to is market structure. Okay, market structure. What is going on in the market? All right. And also we pay attention to key levels. What is the key level of support and what is the key level of resistance? Okay, So here, you can see that we map out level of resistance, level of support turned resistance, equally here level of resistance, okay, and here we mark our level of support, okay. And last 3 months, we can see that if you followed our webinars consistently, in our last session last month, we looked at the doji that appeared on the monthly time frame here, right? Seeing that the month of January, EURUSD market gave a doji candlestick, and not just a doji candlestick, the candlestick was seated on a support level. All right, the candlestick was seated on a support level, and a doji at a support level only signals market reversal. All right, a doji at a support level only signals market reversal. All right, and that was an indicator for a buy, of which in the month of March we are seeing the reality of the doji that appeared in January. And that is why we can see that the buy momentum is strong. All right, so the momentum here is targeting this level, because this level is the next resistance level, is the next key level. Why is it a key level? When we look at the historical price movement, we see that this level had played a significant role in resisting price. Okay, this level had played a significant role in what? In resisting price. In resisting price. And we can clearly see that at this point, a breakout had to determine the new direction of the market for the next 6 to 7 months. A breakout had to determine the next direction of the market. Like I used to say, history does not just repeat itself. Okay? Humans repeat history. And the likelihood that price has been consolidating at this level, and we can see the buy momentum on the EURUSD market targeting the next resistance level, of which if a breakout occurs here, we might see a further push. We might see a further push in price. All right, might see a further push in price. So let's go down to the lower time frame to see more clearly the market direction. Okay, so let me take this out. Now we can see what happened here, and price went up, and equally we can see that the momentum is coming in at this level. Okay, but it's very clear that the momentum is just starting. The momentum is just starting. Now let's look at the price movement at this level here. Observe with me. Now observe how price had broken down further here, and then a push up, a fully bodied candle had appeared. Now what happened, we can see how price came down here, went up like there was a little rally here for like 1-2 weeks. Okay, there was rally at this resistance level, price rallied at that resistance level. Obviously the market momentum from here was just starting, because the candlestick that created the momentum was just formed. All right, and look how far the momentum took. Okay, before it dropped. Now if we are looking at this, from the historical price movement, our anticipation would be clearly, of course, what we can see already, that price would rally at this level. Okay, but there will be a defining moment of continuous push in price. All right, there would be a defining moment of continuous push in price. And this push can determine the momentum of price in a short term and in a long term. So the first target would be this level. Any breakout of this level, then we are looking at the second target. All right, good. Now let's go down to the lower time frame. Because everything we can see here is pointing us to one direction. Okay, so the higher likelihood of a push in price, the higher likelihood of a push in price. So let's go down to the daily time frame. So here now we can see clearly how price has moved so far. All right, so let's zoom in on our daily time frame. this rally here, as we all know, if you know and you have been in the market, is inevitable, right? Because after a sudden spike in price, there would be like a pullback, of which this is the pullback we are seeing here on a lower time frame. Can see this pullback on a lower time frame. Okay, it's creating an accumulation for the further push buy momentum on EURUSD. So on EURUSD, it would be a buy. On EURUSD, it would be a buy. All right. On EURUSD, it would be a buy. So we are expecting a buy on EURUSD. We are expecting a buy on EURUSD. So if I let me briefly explain this part again. Now you can see how price pushed up from this level up until this level, right? And it broke out. Okay, of course it was met with a minor resistance level here, which gave the room for a slight pullback. All right, now this slight pullback is most times, inevitable, right? Because when there is a consistent push up in price, and some persons, traders or institutions who have made money buying up would want to sell, right, at some point. So at this level, sellers had already set their sell order. Okay, some sellers had set their sell order because they are also watching this level as the exit point, which is the next minor resistance zone. So they are watching this level as the exit level. That is why we are seeing a pullback. All right, but the next move that would most likely happen, there is a higher probability that would happen, is a further push in price, given the sustained upward momentum here. And of course, this pullback indicates market is resting. Okay, traders rested, some traders rested, sold, and there is a pullback. After which, a continuous push or momentum would be seen on EURUSD. So on EURUSD, based on our analysis, is giving a buy. EURUSD, based on our analysis, is giving a buy. EURUSD based on analysis is giving a buy signal from here. Based on our analysis, is giving a buy signal. Let's go down to the 4 hours time frame. Let's go down to the 4 hours time frame. I believe the lower we go, the more clearer we can see. The more clearer we can see. All right. So, so we can see that price had broken through a minor resistance zone here. All right. And of course, a pullback occurred at that level. So this is more like a buy momentum is gathering at this level. And there is a higher probability that this would happen. Yeah, there's a higher probability that this would happen. So on the 4 hours time frame, we are looking to buy on the 4 hours time frame. Okay, if you have any question, please do well to drop it in the comment section. If you have any question, please do well to drop it in the comment section. All right, so that I can answer it at the go. Okay, if you have any question, drop it in the comment section. All right, let's go down to the 1 hour time frame. For those who are intraday traders and love to trade on the 1 hour, okay, so this is more of an accumulation phase. So the market at this level is at an accumulation phase. Okay, accumulation in the sense that is preparing for a stronger momentum. Okay, so people who have bought while price was on on a high momentum upward decided to sell. Some decided to sell at this level, and that is why we are having this choppy market here. Okay, with a little retracement. All right, so from here there's the higher chances that price would keep going up, and it is that chance that we are leveraging on to say EURUSD is a buy. Any questions so far? Any questions so far? Any questions so far? The monthly time frame, okay, down to the hourly time frame. All right. So I'm coming back to your question, Barry, that says, is that not an inverted cup pattern that is forming, which goes into a sell? So I now told us that we started on a journey where we started from the monthly time frame. And of course, on the monthly time frame, there is no such signal or pattern forming, as you can see. So what you can see on the 1 hour time frame is some noise from the drop in the week here. So you see this drop on this week here is what you are seeing as a curve in the 1 hour time frame. However, let me get my chart. Okay, good. However, the monthly time frame is very bullish. Emphasis on very bullish. Very bullish in the sense that there is a doji at the support level which has created a reversal in market direction, and we can see the momentum that came in March. Okay, so now there is a little pushback in the spike, which on the higher time frame is not significant. On the 1 hour is not significant. When we go down to the weekly time frame, now on the weekly time frame, we now see that, okay, there are two candles that are reacting. Okay, that are reacting to what? Reacting to the resistance zone. They are reacting to the resistance zone. Okay, which is normal. All right, but with this fully bodied candle closing far above these other candles, closing far above them. All right, so this one candle came up and closed far above every other of this candle. It shows a great momentum in price. So what we may be expecting from this week, since this week is already gone, we might see a push up, a further push up in price. That further push up in price is what we are expecting, right? And when we go down to the daily time frame, it's more clear, all right, that this is not a cup or curve like you said. This is a pullback. All right, this is a what? A pullback. So price had pushed up above this level, then pushed back a bit, and then a continuous push in price. So this is a pushback, and this pushback is signaling accumulation. So which means there is an accumulation process going on here, after which there would be a bullish momentum based on this. I don't know if that's clear, Barry. All right. So that is why we further made our conclusion as to the probability of price going up. All right, and that's it on EURUSD. Yeah, okay, Barry said thank you, I understand, I appreciate. So let's look at gold. I saw someone said let's look at gold, so let's look at gold. Looking at gold on the monthly time frame, it's interesting to see that gold is not stopping anytime soon. Gold is not stopping anytime soon. Anytime soon. If you had seen that on our previous webinar, I had shared with us that gold's next touch is 3,200. That was my previous forecast on our previous webinar, and that was why I put this mark here, okay, as our target level on gold. Now it's interesting to see that gold is heading to that direction. Okay, gold is heading to that direction. So, of course, we can see that gold has been on a very top buy momentum. This is also not just based on price action. This is also based on the fundamentals driving gold. Okay, the economy of the world, investors losing confidence in the USD, losing confidence in other investment vehicles, and seeing gold as the edge, as a source to edge against economic disaster, inflation, and many other things. All right, good. So that makes it a very interesting chart, to look at. Now, let's go down to the weekly time frame on gold. Okay, these are our weekly time frame on gold. So if you observe the chart pattern and movement of price, you would know well how price has been moving on gold. After a breakout, there is a pullback, and then it moves, a pullback, takes a break, moves again. Here it took a break. It's going to move here and it's going to take a break. Okay, and move up, take a break and then move as far as possible. Right? So when you look at how gold has been moving after its breakout from this long period of consolidation, okay, of resistance, it broke out in 2024. Broke out in 2024 and never looked back. And looking at gold, here we are. So on gold, I wouldn't say it's a buy. Okay, general overview, there's a buy. So the question is not just is it a buy or a sell. The question is now when to buy. All right, when to buy. So looking at when to buy, we need to go lower to the lower time frame, which is the daily time frame, to see some key levels that we can, take as our buy zones. All right. So we can see that if there is a consistent consolidation on this level, okay, then we might wait to see if price will push back a bit or if price will push up. All right. So because right now gold is volatile. Okay, so it's important that we put all this into consideration. All right, Great. So we go down to the 4 hours time frame. Okay, good. So on gold, we might see a pullback from what I can see on the 4 hours time frame. On gold, we might see a pullback. So because let's look at this, this is a key level on gold. This is another key level on gold. All right. Now, what do I expect to see here? I expect to see price drop. Okay. All right, because this is the first time price is ever getting to this level. So there has to be a significant drop in price. A significant drop in price. There has to be. There has to be a significant drop in price. So on a gold, we are looking at a short time sell and a long time buy from this level. So you can either set a buy limit order on this level and it triggers when it gets here. Okay? And that would be all on our analysis for today. So it's important for us to take note of our risk management. If you are a newbie, it's good you start with a demo account and get used to it. Also use your stop loss. That's very important. Trade with risk to reward ratio. Okay. Risk only a small amount per trade. Don't risk 10% on a single trade. If you can do 2% here, 5% here, 3% here. Okay, that also buttresses the point of number 5 that says diversify your portfolio. 6 says avoid over trading, avoid over leveraging. 7, stick to your plan. Okay, that means you need to have a plan. If there's no plan, there's nothing you can stick to. Also, keep up with the news. The market is ever evolving. There is always something, that triggers the market. So you have to keep up with the news. Avoid over trading. Avoid over trading. Avoid over trading. Avoid over trading. Review and adjust your strategy regularly. Review and adjust your strategy regularly. Also, we have a trading app on Google Play Store and Apple Store where you can enjoy low spread, fast execution, zero commission as well. And you have access to various of our educational resources, 24/7 customer support, and strong commitment to fund and data security. We have an interesting offer for you, which is a promo code that helps you double your deposit in just 5 steps. 1, open the Octa trading app or visit our official website. Go to your profile, find the promo code section in the menu, enter the promo code and press activate. Then you're asking yourself, what promo code is it? The promo code is Tunmise 100. TUNMISE 100. Make a deposit and enjoy your bonus. A summary of our strategy is focused on price action, and its component is suitable for traders and applicable in every scenario. These are some of the key takeaways that are very important to focus on. Analyze your trading instruments, review your actions, and reflect on your decision. Keep up with latest market news, use educational resources, and that's it. All right. Thank you very much for joining us, and I look forward to seeing you in our next session. Bye, guys.